Welcome back. This is your official sector trends this morning. As an employee, you might encounter financial challenges in trying to make ends meet, particularly due to the current high cost of living. Now, a number of lifestyle adjustments can be made to ensure that your income fits your budget. It's impossible to adjust some important cash needs, such as emergencies, school fee, rent, or critical occasions, such as birthdays, anniversaries, or weddings. Today, we're looking at how you can access to bridging finance that allows you meet your financial needs as an employee. Joining us this morning to help us with this discussion is Judith Imamai, who is the CEO and founder, Saloha Limited, and Arnold Ngasale, a microfinance expert and senior relationship manager at Rafiki Bank. All right, let's get into what this is. But just before that, Judith, can we get a picture of the fin credit space in Kenya? What is the long requisition status of most of the employees?
Thank you so much, Elijah. And the general theme of the fin credit situation in Kenya right now, especially in the terms the employees, we have so many companies that are actually handling that need for financial credit, and particularly for us, we narrowed it down to the employee, because in Kenya we'll be kind enough to say that our salaries is what is really dependable in terms of real income. And I'll be honest that most lending companies struggle with one bit. What are the sources of income? And to us, narrowing it down to salary as the most known authentic source of income to any Kenyan, then brings this lending perspective to actually the secured, most reliable income that comes to the Kenyan. So I would literally say, with the changing economies and everything being unstable right now, what you left with looking at is, do you have a salary? Do you have an income? And that brings down to what you take home at the end of the month. So I'll definitely say there's been a big change in matters. What is your reliable income in Kenya? And that's what designed the path of, is an employee able, anytime, any place, to use what they actually take home and guarantee their take home to access credit? Yes, that's what I would say will be the shift right now in the market.
Yes. Arnold, let's also get a picture, Arnold, of how the space is now, especially during this time of the COVID-19 pandemic, when the conversation also around this area is exactly how we've gone through a lot of job losses within the economy. What sort of shift are we talking about, especially in this space for fin credit for the employees within the economy?
Thank you so much, Elijah, for this opportunity. I think one thing we may need to consider is the data as far as formal employment is concerned before we even delve into access to credit. So there was a report which was done between 2015 and 2019, which showed that the number of employed people in this country are 18 million out of 40 million. But the number who are formally employed is only 3 million. So it leaves about 15 million guys in the informal sector. Now, when you narrow down that to now access to credit, I think Judith has alluded to the element of dependable or sustainable or consistent income. Now, therein lies the challenge at this moment in time. You realize this data was between 2015 to 2019. So it simply means the 3 million shillings you're trying to peg the credit on has significantly going down. We're probably talking about 2.2 mics of formally employed individuals. Now, when it comes to basic credit appraisal, ordinarily, you can only take up to a third of your monthly income to service a credit facility. And if you look at a basic household, guys who are formally employed and normally have so many dependents, between 5 to 10 dependents. So you're looking at 3 million people who essentially have to assist a lot more people. I don't want to go into those numbers because they're essentially mind-boggling. So you're looking at 3 million people who essentially have to assist probably 10 other guys per household. So in terms of access to credit, I think traction has grown as far as FinCredit is concerned, because it provides an alternative solution as far as access to credit is concerned. Because for the conventional lenders, they'll simply look at the payslip and basically draw a position in terms of giving credit in terms of how that payslip is structured. How is it? What kind of facilities are on that payslip? If there's no
Yes.
facility, then they can go up to a level of a third of the net income. If there's no more room to get credit, then it becomes a difficult conversation.
Pretty much. All right, Judith, let's
Yeah,
talk.
that's very true, Arnold.
Yes, Judith, just go right ahead.
What he says is really, really critical,
Yes.
because beginning this journey in the FinCredit for employees, you're looking at their pay slips, right? You're looking at their third row, and COVID came and all the salaries are going below their third of what you're actually qualified for. So what happens? We changed the definition of FinCredit and advance to advance someone's life, to the point that it ceases to basically just be credit for a short-term need. It becomes a lifeline to expand your income sources. You understand? So we had to literally transition that thought to, yes, the salary is some base of security for this time. I have a job, yes. Formal, not informal, because we look at both sides to a level that even a casual worker would be able to access credit. That is
Yes.
how far we had to go. And to be honest, their third rule applies because of responsible lending. It's very important to not ignore the fact that you will not lend beyond what you can get income for. But there's a second factor that has been ignored in this sector, and that is the literacy of actually using that income that you're constantly earning to actually expand your incomes. That's how come you transition and advance to a side hustle that you can actually invest in and get more income. Do you understand?
Yes.
So basically, as we're shifting and the money in the bag is getting little and our household needs are not changing, you understand? You can't really cut your food intake, and if you have 5 kids, you can't really reduce them to 3 in terms pandemic, no pandemic.
Yes.
Your need comes low to a level, but your basic still has to be met. So I'll be honest, in Saloha, being in this particular area of lending, a few changes had to be made, and basically now change the perception, even to the employee, that you're getting an advance that can advance your life, not basically to be checked off at the end of the month.
Yes.
That storyline had to change completely. And we found a better way of displaying that through our trainings, because in Saloha, once you onboard a partner who's an employer, the employees go through training. And we changed the narrative to, yes, you're getting an advance, but that could change your life, because money is about timing. And you get an advance before your salary. Those 2 weeks you get that advance for could make you more money as you actually waiting for checkoff. So as Arnold says, I agree. The figures would not add up when we look at the statistics of who is employed, who is not employed, what's your guaranteed take home.
Yes.
But again, the issue of literacy in that level of how you manage the little is how you get the more.
Yes.
And that concept has always been ignored. There is no little money or more money. It's just how you manage it. So
Arnold,
that is what really has to come up.
Yes,
Yeah.
Judith, I'm sorry to cut you short. Let me just bring in Arnold into that conversation as well. Arnold,
Okay.
you hear what Judith is saying, that, well, once we got into COVID, then the risk level was actually even sort of increased within the economy, because now we're talking about what used to apply as a third within job cuts and salary cuts was not going to apply anymore. Can you talk about the risk level in this fintech space of advanced salaries on employees? How do you therefore price this risk so that you can also attract more of the guys who have these jobs to actually take up this credit?
Yeah, so First of all, I'd like to acknowledge something very important which Judith has mentioned. I
Yes.
think most guys borrow for normal spending, which is essentially not supposed to be the case. I
Yes.
think borrowing should be pegged on probably an investment which will enable you to make more money and essentially supplement your current income. But if you look at things from a basic banking level, you realize last year most fintechs were up in arms when they were not they wanted to start listing guys because it's a very volatile space and it's very capital intensive. I think most guys really don't know from the back end how capital intensive it is to finance this type of credit, simply because you're dealing with guys who you've never met, and you're dealing with guys who you have a limited position in terms of appraisal, in terms of looking if they're employed or if they're in business. You're very limited. You're
Yes.
sort of limited to probably a form which they fill in, and then from that form you'll probably get other data from third-party sources, probably other fintech institutions, how they've paid, so that you can be able to peg your risk. So on a basic level, it's a very risky affair. It's a high risk kind of business. However, as Judith has alluded to, if we can reach a level whereby guys are trained on how to use credit, then the narrative could change. Generally speaking, if you look at Kenya, it's a mass market, and most of institutions which are involved in mobile lending, for example, have really suffered, particularly because of that element of mass market and that element of a whole being finding it difficult to differentiate between who is formally employed and who is in the informal sector, because you'll find guys probably in college, guys in mitumba business and so on and so forth, guys who are probably running the local butcher, local kinyozi, trying to get credit, but at the same time, when you look at the income or you look at the revenue part of their business, it's a bit inconsistent. So for you to educate them on how to use the credit, use the extra income that comes on their way, I think it's a crucial element which could actually change the narrative long term. But in the short term, it's actually a very high risk
Yes.
business. It's a very high risk business.
Yes. Judith, let me ask you this question as well, because then you're saying, well, that the one thing that you have to do once you get a partner is that you have to tell them, well, this is exactly where we are training you to actually get this credit from us. But then in the long term, Judith, is that not going to sort of, I would say, increase the period or the attractiveness of the people to come to you? And how are you, and how certain do you get that whoever is borrowing from you is actually going to invest these monies? Because at the end of the day, that's how you know that you're doing what you say, quote unquote, healthy business at the end of the day.
Okay, that is really interesting. Let me point out something. Arnold, you brought up something really important.
Yes.
From bricks to clicks, we literally transitioned from the traditional ways to the technology way. But where I feel there was a bit of a miss is bringing the bricks into the clicks, which is basically structuring your model to allow easy access first, but still not losing the structures or the particular appraisal process.
Yes.
Fastest way, but still structured. Okay, how did we manage to incorporate this together? When you're doing a tri-party agreement with SaloHub, basically onboarding, we get a partner, they partner with us. We're looking at a bigger picture. We're looking at operational efficiencies of that particular company. So we are sorting two people's needs.
Yes.
The employer, who at a point where you need your cash for something else, an employee needs it for an advance. In the changing nature of financials in companies, that becomes a burden. So one, we are sorting those efficiencies all. For every need that comes before payroll, then there is a provider for that. So you can go to SaloHub to actually get that. And for the employee also, there's so many other reasons why people actually run to the mass lending market to get their emergency needs and their advanced needs, as opposed to literally getting it from their own employer, but through a provider. Let me give you the difference between the two. Most Kenyans, like Arnold has said, will always take money just to sort their needs. most of the time you spend it even before you decide what you really wanted to do it or how it will be recovered.
Yes.
That's the reason why debt has accumulated, and everyone is taking money. Most of them, you sit with them and say, I've taken 5 loans for 5 different apps, but they can't tell you what they did with the money. And paying becomes an issue because you don't have that income. So as much as we're in the fintech space, there is a possibility to reduce the risk through structured lending, but with ease access.
Yes.
That is the space that I feel has to come in. Elijah, as you say, you feel like it wouldn't be attractive, but once you have an app that monitors your income, that is legit income, shows you how you budget that income and spend it, you have more control of yourself.
Yes.
As opposed to just getting an app where you can just draw money. But if you can do an end-to-end kind of relationship start with employees or any casual worker that is doing this, it's a process. And once you appreciate that process, then the risk goes low. It's still technology, yes. There's still a structured process, top end-to-end, yes. And we're still getting the service. Now,
yes.
That brings us to a more lending-friendly environment and not a hit-and-run situation that is happening right now. It's basic survival. Yes, we are surviving, but can you allow a provider to hold your hand through it? As little as you're getting in, if you structure how it goes out and how you can get more in, then you're more financially responsible. And those are conversations not many people would want to have, and is where most innovators need to get to. In matters financial services, your health, once you bring it to a personal level where they can literally account for their own salaries, plan for their own expenses, they become more aware of what they are doing, as opposed to, there's a need here, I need to sort it, so who is going to give me the money?
Yes.
Then we become cash trapped, debt trapped. That is where we're coming from as innovators now, because as beautiful as technology is, as much as we've gone to the clicks, the bricks are still like a core basis for everything that we need to do. Am I right, Arnold? Am I right or am I right?
Yes, let me bring in Arnold on that as well. Arnold, as you get ready to respond to Judith. But at the end of the day, Arnold, do you feel like formalizing the space is left for the companies themselves, like Salohub, that are now into this space, that they're the ones who have to look and collaborate with the different employers in the economy so they get some sort of formality into it? Is that what we're talking about? That the formalization of this really is left for the collaborations that have to happen between the service providers and the employers, the ones that you're talking about this morning, the 3 million, the 4 million of those who are employed to these companies. Is that what makes it a bit complex?
Yeah, I think first, what Judith has mentioned is very important in terms of having a social impact aspect.
Yes.
on the lending. Because
Yes.
I think most lenders nowadays are lost in numbers. You're lost in targets, you're lost in making money, and therefore that's why you have a situation whereby there's no responsible lending, for lack of a better phrase.
Yes.
So I think what Judith is talking about is crucial in terms of having a social impact aspect, which comes along with the lending, whereby they essentially partner with the employers, educate the employees, and then they structure the facilities end to end. That is beautiful. In an ideal world, it will work wonders, and it will enable sustainable lending and basically sustainable growth as far as the employees, the employers, and the lender are concerned. So I think that their business model is innovative as far as this business is concerned. But the other players are still in the Wild West. The other players are still in a situation whereby they're looking at the numbers, they're looking at how many facilities can they give per day, how many of them will go bad, how many of them will they make money from. So if the narrative can change, and if probably we can have a situation we can have more players like Salohub, then we'll definitely have a change in the narrative. However, then at the end of the day, also if you look at the numbers in terms of those who are formally employed versus the needs, we have a long way to go, because as long as the numbers remain the way they are, we still have a situation whereby guys are borrowing for daily needs. Guys are borrowing probably for that. For so maybe you need to pay school fees somewhere. You have that extra need, and therefore you find yourself borrowing just for that extra need. And it looks like it's a conversation which needs to go on with the players in the market, just trying to involve that aspect of social impact and social change
Yes.
alongside business. It's not an easy thing to juggle because most of us are running after numbers and growing our balance sheets.
Judith, let's make it as
Okay,
practical. Judith,
thing.
let's make it as practical as we can this morning for anybody listening to you. Well, I'm employed. I walk into Salah Hub today and I tell you, well, I need to be part of your system. I need to be your partner. In 2 minutes, Judith, if you may, what process are you going to take me through?
Okay. Besides our tri-party agreements, which is basically business development for us, and we approach the partners, on our web portal, we have an access link for the employers, where when you click the link, there is a form that pops up and you upload your pay slips, you give your statutory details, which is your ID, your NSSF and NHIF for verification, and you upload your pay slip, which then will be used to verify your employer. That is basic steps, very easy, 2 minutes, you'll be on our database. Of course, after that, through your email, it could be your work email or your personal email, you will get a link that actually gives you the application after verification. That happens within 24 hours.
Yes.
And once you get, because our app is a private app, it's not something you go on Play Store and actually download it randomly. That's how we limit the number of usage, because now it's not for your basic everyday lending. It's for you personally to make that choice to actually be structured in a way that you have a better way of borrowing through your employment status. So
Yes.
when you get to our web portal, we also have a web app. So once you get your details in, within 24 hours, verification is done through your HRs and your company, and then you get access to your limits and you start borrowing with us. So that is for any employee that is coming to us through the web portal. Now, that was very good with us on our first year of lending. And usually once your corporate is onboarded through our portal, then they become our partners. That is what we go and even use to table our proposals on the change that we want to see. And most of the time with our proposals, most employers find it as a release, a safer release of their employees to us and to themselves. And that relationship and that collaboration just makes it even easier for their operations.
Pretty much.
So that is the simplest way.
Yes.
We operate. Yes.
Yes. And what about somebody who's in the informal sector? But I don't have to be employed, but I'm running a day-to-day business and I want to be part of that. How are you going to track whether I'll be a good client for you?
Wow, you just opened up a great conversation. Now, Salohab came up with Uradi. Uradi came from Kenyan for Rada, and that's basically for the day-to-day employees. We still treasure them as employees. We still feel like that day-to-day income is still your salary. At the end of the day, it's what you take home. So what Uradi does, which is still being powered by Salohab, it literally runs a digital register. Let me give you a scenario. I am a construction worker at Construction Place X. I report to work every day. We get into partnership with your contractor or the company that has employed you, literally. And once you get in and out, you clock in and out every day. That becomes your registry. Through that registry, we are able to actually find the consistent casuals, and we are able to lend to them. That's now part of also our partnership when it comes to the casual workers.
Yes.
And the day-to-day earners of their income. Yes.
Pretty
so
much.
we made a provision for that.
Yes.
And we're growing it, and it's going good because every single income you're bringing home matters. The only way to do it is to structure it. Whether you're getting it daily or monthly, it's still income. It's still part of your salary.
Yes. All right, Arnold,
Yes.
can you help us clear this conversation this morning? Do you think that this is the way to go, especially when we consider what is over the other side? This smart learning that you're talking about, this learning apps, this, I would say the other fintech that doesn't necessarily have to follow what Salo Hub follows. In 45 seconds, Arnold, if you can, is this what is going to win at the end of the day when it comes to responsible lending within the economy?
Yeah, as I mentioned, I think they've taken an innovative path, and from where I sit, I think it's sustainable. I think if it's properly carried out, if they don't get overtaken by the profit motive, I think it's a sustainable business model because you have three parties: you have an employer, you have an employee, and you have a service provider who's willing to walk the journey and essentially grow exponentially. So I think
Yes.
it's a sustainable way, and I've realized that as we go along, innovation and social impact are essentially coming to the fold as far as business is concerned, and I feel that is probably the 21st century way of doing business.
Pretty much. Arnold Ngisale, microfinance banker, and Judith Imamai, CEO and founder, Salo Hub Limited. Thank you very much for taking your time this morning to speak to us here on a Metropol television. We take a short break. Once we come back, the economic review, top on that, results from listed companies in the country are coming in, and top on that, the effects of the banking industry. And I'm talking about the effects of the coronavirus pandemic. What are they and what do they say about how we are getting on in 2021 once we come back here on a business app?